Good morning, everybody. It's 11 o'clock, so I guess we are supposed to start now. So, are we ready? All right. I hope you can hear me so that I don't. If you can hear me, just click the thumbs up. All right, all right. Good morning, everybody, and welcome. I'm so happy to see you all here. I hope you're ready because we've got a lot to unpack today. My name is Idema Faith, and it's my pleasure to welcome you all to today's webinar, and it's themed Estate Planning for Nigeria Digital Generation. Thank you so much for taking your time to join us. Welcome again. Welcome, Adesoji, I can see you. Welcome again. So I want to start by painting a quick picture of why we are all here today. Over the past decades, we've witnessed one of the greatest shifts in wealth creation in history. Today, a software application can be worth billions, a YouTube channel can become a family business, a cryptocurrency wallet can hold life-changing wealth, and a personal brand built on social media can become an asset that outlives traditional businesses. For many young Nigerians, success no longer follows the conventional path, or let's say the traditional rule, right? It's now built through technology, innovation, intellectual properties, and ideas that exist entirely in the digital space. Yet, while the way we create wealth have changed dramatically, the way people protect this wealth have not changed. Few founders think about succession while building their startups. Few content creators consider who would manage their digital assets when they are unable to do so. But the greatest risk we are facing today among wealth creators is not even the inability to generate this wealth, it's the absence of a deliberate plan to preserve it. A digital dynasty isn't created by success alone, it is created by intentional planning. And that is the conversation that we hope to have today. As Fiduciary Services Limited, we believe that estate planning isn't about preparing for the end of life, it's about planning for the continuity of life, business, family, and legacy. We are honored to have an exceptional panel joining us today with experiences across blockchain, technology, business strategy, and law. So let's begin. But before we dive into that, let me quickly place some ground rules. So the first is please display your full name so that we can address you properly. Kindly stay mute when you're speaking. Also, you can use the chat box for questions. We'll take our time to answer as many questions towards the end. And if you would like to speak, just use the raise hand feature and we'll call you to speak. Thank you so much. So let's meet our panel. So I think the first speaker is Chike Okonkwo, Institutional Sales and Business Development Executive at blockchain.com, where he leads digital asset adoption and institutional partnership across African markets. And the next person we have is Omotola Dorcas, founder and CEO of Virtual Domain and co-founder and COO of African SME Assembly. She has trained over 50,000 entrepreneurs and worked with 2,000 brands across Africa. We also have Edward Ibekwe, digital asset infrastructure professional and business development lead at ChainUp, working across sub-Saharan Africa on exchange platform, custody, and stablecoin infrastructure. And joining us today is Ronald Egu. He's a product marketing manager specializing in EdTech and SaaS, and a 2X founder passionate about AI, automation, and helping people understand the new technology. And finally, we have Oyanagaki Tracy. She's a corporate lawyer here at Fiduciary Services Limited, advising clients on estate planning, trust, succession, and private wealth structures. Let's welcome our panel with a warm welcome. Let's see your emojis. Thank you so much. You're in good hands today. So let's get started. Thank you so much. I can see all of you. So we are going to start with a question for the whole panel. And having worked with founders, startups, and technology companies for years, how has technology changed the way young Nigerians create wealth? And which sector of the digital economy do you think will produce the next generation of wealthy Nigerians? So I think let's start with Edward. Edward, let's hear you.
Hello everyone. Sorry, could you take that question again, please?
Okay, so it says, having worked with founders, startups, and technology company for years, how has technology changed the way Nigerians create wealth? And which of the sectors of digital economy do you think will produce the next generation of wealthy Nigerians?
All right, thank you very much. It's a pleasure to be on this session. Thanks for having me. So I would say over the past decade, especially coming from the perspective of an operator in the digital asset space, I would say that prior to innovations like the internet and blockchain, wealth creation was traditionally, um, you know, offline in a sense, where you needed to get through a lot of gatekeepers, right? But with the advent of technology, with the advent of things like the internet, social media, where you no longer have to wait for gatekeepers to give you the permission to be distributed. You have people creating their own, well, should I say, building their own businesses and creating awareness around their brands online. It began to give a more direct access to the market. And even over time, we've seen companies that were built using the old paradigm begin to follow suit, looking for influencers today and things like that. And then, of course, with more and more advancements in technology, we find that the path to wealth creation has become even more straightforward. Just a quote that I saw somewhere. Someone was saying something about AI, artificial intelligence, that today it's no longer about skill, it's more about vision, because with the kind of access you have with AI to build solutions, to build digital products, you can see that where it would have taken you having to know how to code, or having to like have a lot of money to employ people to code for you, you're able to just build these things yourself. So it's also in a way giving reduced the dependence on skill. Why? Because we have technology that is able to do this for us. So generally, I would say technology has reduced the barrier to entry. Digital products are a thing today, and a lot of people have been able to take advantage of those. Another example would be, when digital assets or crypto was picking up, you had people that were becoming, millionaires overnight simply by speculating on the right assets, right? So I would say anyone here today who previously has felt, oh, I'm not able to, keep up to pace with, technology and the likes, I would say it's in your best interest to not try and understand everything, but at least understand how it applies to you, and, learn how you're able to leverage it to improve your own outcomes. Yeah.
Yes, that is really amazing. Thank you so much. To be very honest, even many people that do not want to use AI or try to like put technology into their infrastructure initially, now they have to move. Everybody have to move Technology is now the new thing. You don't have to wait and let everybody overtake you. That's what is creating wealth for Nigeria right now. So I think we should move to Chike. Please, let's hear your thoughts on this.
Hi, everybody. Can you guys hear me?
Loud and clear.
Good to see you, Edward. Dorcas, some of my very familiar faces, and everybody here present. Thank you so much also for having me, FSL. So I think, as Edward rightly said, technology has actually removed a lot of gatekeepers in different sectors. And 20 years ago, wealth either required inheritance, government access, or maybe you need a very large ton of capital to be able to build wealth. But today, technology has helped in lowering that barrier to entry. A 20 to 24 years old child, boy or girl, somewhere in Yaba, can actually earn in either in any currency at all, whether in naira, dollars, euros, pounds, any currency, just by having access to the internet, a digital product, or just even in their bedroom, either their home office or whatever, without anybody's permission to actually do so. And I would say there are three shifts that really happened. One of them is the barrier to entry has collapsed. Income has now become very, very global. I would say you can serve a ton of customers from different countries just sitting in your home. Another thing I would say is assets has now become digital and very, very much borderless. And I would say one of the technologies that actually really portrays this is the blockchain technology, which is, I will always be very partial about that because that's an industry where I play. But I think I will just throw some sectors I think people should really watch out for. And these sectors are, we already know, as much as people have said fintech, yes, there's a whole craze around fintech. But I know that as we begin to build technologies to lap on top traditional systems and traditional sectors, there will be need for a lot of digital payment products. Right now, many of the fintechs, sometimes maybe after a while, they die out. I would say it's because a lot of businesses, traditional businesses, are not adopting financial payments for these businesses to be able to see more companies to serve. But as a lot of people are beginning, with the advent of AI, a lot of people are beginning to automate systems. When you begin to think of automation, you must also think of how to automate payments. So people who are building digital payments, simple digital payment solutions, will be one of the biggest engine for digital wealth creation. The content creator economy is blowing up from people who do short content, whether on YouTube, Instagram, TikTok, anywhere, and whether music artists, people who are in film, anything at all, even people who are in sports, who are now leveraging content creation to promote, whether you are a fitness coach, instructor, whether you are a footballer, whether you're a basketballer, you can just from anywhere showcase your skills. I know somebody who, just by posting most of his short basketball content on when he goes for training, got called up to come and, what's it called? Play for a team. And also, he got also called to come and train some young pupils in a school on basketball. So you can see that these are what just the digital economy is being able to help people. Another sector that I am particularly very, very biased about is agric and food processing. That's somewhere which I know people are not really, people have taught agri-tech, but I tell people, I say, we must be able to figure out how to marry the technology to the traditional system of agriculture so that we can level up from where we currently are. The other one is the AI boom that's really happening. We need to figure out, there will be more people who are, in fact, younger people are figuring out now how they can use AI to further solve real problems. away from just using AI for prompts, using it to build systems. The other day I was with Edward some weeks back, and he showed me some things he was doing with AI. Very fantastic stuff. And for someone like him who does not do a lot of technical work, but he was able to build out what he built using that AI solution. And I told him, I said, that's a product that he could sell. And when he's ready, I'm sure I gave him the proposition as a salesman. I can be willing to sell that to him. So these are things I know that digitally a lot of people are going to build. Then the last but not the least is digital assets, stablecoin infrastructure. People who can build real solutions on the digital asset space, whether you're leveraging stablecoins, whether you're leveraging the blockchain technology infrastructure itself to be able to build solutions that can bring transparency or that can just bring trust, you'll be able to build wealth digitally using these different places. So I would just say that for me, I sit at the intersection of, let's say, crypto, blockchain, and also somebody who loves agriculture. These are two places for me I know a lot of people who are going to build digitally will build wealth from. So I think I'll stop there.
Oh, that's beautiful. That's really beautiful. Just like Chike just said, technology have really, really changed the way we create wealth. Someone of 18 years, 20 years can start generating money that even in the traditional way, you need like some level of education or some level of exposure to get to that particular position. And technology have actually given us access to literally the whole world. You can be in Nigeria and have access to people in different places. And what other way to generate wealth if you're not like exploring or being seen in the other places like other countries and all of that. So I think he mentioned AI as one of the digital economy that the next generation are using to generate wealth. There is AI, digital assets, content creation, the creator economy, which he mentioned. And to be very honest, there is a lot of content. Almost all the industries need content because without content, you literally cannot do anything. Whatever you're selling, business, like whatever it is, you need the internet, you need content. So now content is like the major thing that I would agree that yes, that one is like something that if you cannot create content in this age, you've not started. So I think thank you for this perspective. Thank you, Edward. Thank you, Chike. Um, this is a good one. Let's go deeper with some of you individually. So let's start with Edward. Edward, if are you there?
Yes, yes, I'm here.
All right. So, Edward, stablecoins, tokenized real world assets, and blockchain based investment products are becoming increasingly mainstream. How do you see these innovations influencing wealth preservation and intergenerational wealth transfer over the next decade?
Okay. So when when we talk about foundational technologies, when we talk about things like blockchain, things like artificial intelligence, I think I like to encourage people and say, look, there are two broad or two main ways to look at this thing. There's the operator that is thinking of how can I use this to, serve customers, and then there are the end users that are looking forward to how these technologies improve their lives. So when you think about like the things you said, you've talked about stable coins, you've talked about tokenization. The truth is, um, if any business or if any technology at all is going to go mainstream, it has to be abstracted. It cannot be complex to the end users, right? So a lot of these terminologies are you'll find them on the operator side. But then when it gets translated into products and services, the end user might not even know that they're interacting with these kind of things. So let's look at stablecoin. One of the things stablecoin is doing for us today is for the operators is making the process of settlements faster and cheaper. Say, for example, you're trying to move money across different countries. For those of us in Africa, originally Africa, I would say, was at a disadvantaged position because I want to I want to send money from myself here in Nigeria to somebody in Kenya. It's interesting that the journey of that money goes to US or goes to Europe before it gets to Kenya. And those things add to the delay. It takes time to eventually get that money in to the person I'm sending it to in Kenya, and it increases the cost. Okay. So when technologies like stablecoin came on board, the operator said, "Oh, okay, it's actually easier for us and faster for us to, you know, to handle the movement of money." Now, for the end user, what does it mean for the end user? It means that when you send your money to somebody in another jurisdiction, the person gets it quicker, right? And then it comes at less cost to you. When we think about tokenization, what is tokenization about? Now, the same technology that is enabling things like, fast transactions, right? Immutable transactions, is also making it possible for investments, to take or inherit the same benefits. So tokenization is nothing new. It's just about, okay, now that we have a technology that lets us apply the benefits of blockchain to our everyday experiences, how is it going to interact with investment as we know it today? Normally, you're used to buying stocks, you're used to, investing in real estate, right? So tokenization is a process of just bringing all of these things that existed traditionally and bringing them on chain. So the benefits that they now extend is in cases where maybe to invest, you want to invest in an oil vessel. Previously, with the traditional rails, it was not possible for you to do that because you most likely for young people they might be priced out of those kind of investments. They don't have the amount of money it takes to get in there. But now with tokenization, you can invest in an oil vessel. Why? Because tokenization makes it possible to fractionalize those kind of investments. So it's now able to come down to a point almost anybody can invest in it. When it comes to when for the operator, maybe real estate, for example, when it comes to how they access funds for their projects in Nigeria, they are looking at banks, they are looking at HNIs, and, they are thinking of ways to access capital at a cheaper rate. Tokenization for them makes it easier for them to now like, okay, I'm building or there's this real estate project that's going on. We're going to fractionalize ownership and, come up with flexible business models and go directly to the investor. So at the end of the day, these technologies are not doing they are not new things that we need to interact with per se. They are just making those same things that were available more accessible to the everyday person. You can invest at a cheaper rate, and instead of waiting till you've amassed, multiple millions before you start investing, no, it's easy for you to now start investing today, right? You want to send money instead of, concerning yourself with how much you lose because of the fees you're paying on transferring money. It's easier for you to do all of those things. So it's not something that anybody should be, at least the end user should be afraid of. It's really just there to, to improve your lives and make things more available and accessible to the everyday person.
Oh, that is really insightful. That is actually really good. Thank you, Edward. Thank you, Edward. Tracy, I want to bring you in here. Tracy, are you there?
Yes, I'm here.
All right, let me bring you into this particular place now. Estate planning is still widely perceived as something for the elderly. Why do you think this misconception still persists, especially among young Nigerians?
Okay, well, majorly the conversation around estate planning has been framed around debt and old age and all that. So most of the younger people feel like it's not time for me to consider this yet. It's not time for me to put these plans in place. But the thing is, asset planning is not really about debt. It's about continuity. It's about ensuring that in the case of any inevitability, that your assets will still be able to function properly and take care of those people or even you in the event where you can't access it. Another thing that guides the conversation is our culture. You know, the culture in Nigeria, we're more of a, if you ask someone that, oh, have you done your will? Have you made your estate plan? The next question they'll ask you is, are you wishing me death? Do you want me to die? So they always respond with that mindset. But it really shouldn't be so, because like I said, life is unpredictable. Anything can happen at any time. And the young people might feel like, oh, they don't have enough assets, they've not built anything, but you will be surprised at what you actually have that is actually valuable, but you don't know that it's valuable. And those things, you have to plan for them in advance. You have to make sure that they are properly kept, you can get access to it at any time, or your beneficiaries can get access to it at any time. I tell people that you shouldn't really wait till old age before you start making your estate plan. In as much as you have people that are depending on you, it could be your siblings, it could be your parents, it could be your child, probably you just got married or something, you should start working on your estate plan. So, but the general outlook is just, okay, it's too early. I don't need to do all that. But then you don't need to have a house, you don't need to have a car before you say, okay, you have wealth. Today, like our speakers have said, our estate is now more than just real estate or tangible things. For a young person, you have your shares. You might have bought shares in a company. You have your intellectual property. Depends on if you're a photographer, if you're a creator, your IP forms part of your estate. If you are a software person, your source code for your company form parts of your estate. If you're into crypto trading, if you're into NFTs, those things are parts of your estate, and those things have value. So you can't say you want to wait until later to make your estate plan. So in conclusion, the biggest myth is that, okay, like I said, when you are old, that's when you start your estate planning. But the truth is, the moment you acquire something that would matter if you're no longer here, that is when you should start your estate plan. Like I said, for our generation, you don't need to have the largest investment portfolio. You could have a startup, you could have a cryptocurrency wallet, you could have a YouTube channel that's bringing in revenue for you. Those are your assets. And you are making use of them in your young age. So you should also plan for them as you're making use of them. So the earlier you start planning, the greater the likelihood that the wealth you create today will continue to serve the people and the causes that you care about. Thank you.
Oh, thank you, Tracy. Thank you so much. Just like Tracy have said, apart from the misconception that it is only for the elderly, some people don't even know that these things that they own actually need to be documented. They don't even have an idea. So that brings me to Chike. Chike, from your interaction with founders and digital asset investors, how aware do you find young wealth creators of the importance of documenting digital holdings, wallets, structures, exchange accounts, ownership? How aware do you think these wealth creators are about the importance of documenting these things? Chike, that's for you. Chike, are you with us?
Sorry, can you guys hear me?
Yes, we can.
Okay, so please take the question again.
Okay, I said Tracy mentioned that apart from the misconception about the estate planning for just the elderly, most people that are creating this wealth, they don't even know that these things they have are assets that can be documented. So from your interaction working with founders and digital asset investors, how aware are these young wealth creators that they're supposed to document these digital assets that they have? How aware are they of the importance of it?
So I would say I have quite a number of founders who are my friends. I myself, I would tell you that it was last year, I think mid last year, I started studying about what a family office really meant. I used to hear about it, especially working in the finance space. That was where I started understanding, okay, there's something called a family office. I used to see it from an angle of just a family office that invests in businesses. But I have now come to understand that when you hear the likes of the Rockefeller family, all the family, the Dan Tata family in Nigeria, when you hear about all of these things, it started to make sense for me that this was how they have passed down wealth down to generations, even after the first person who took the first risk to build what they call wealth that's transitioned. So I'll say one of the things like what we're doing right now, founders are not really engaging, or creators or people who are building wealth digitally, they are not really engaging on this level to understand it. And I think what we're doing here today is actually bringing it to the forefront of people who are really interested. And I really give kudos to you guys for doing this. I think some of the steps founders do not even what's it called? Some of the steps that founders can actually take to address this for me is that founders who don't know how to preserve their wealth, or don't even know that their shareholding can be transferred, I think that's where there's a very, very big risk, if you ask me. For example, let's say if a founder or if somebody who has been building wealth digitally were to have, let's say, maybe the person is sort of incapacitated to even do some more things, and somebody just needs to step in. I don't want to use the word maybe the person is dead, but let's say that also now becomes the case eventually. If that founder has not protected themselves, maybe by having a system that has been put in place, like an estate or a family office, as we can call it, there's a very, very big exposure there. And I would say the sequence this can actually follow is that you can say maybe if there are equities this what's it called, founder holds or in his business, it goes into let's say maybe a deceased estate or something, and when there's no will, how does distribution now follow for maybe either if there's a family member or if they have offspring that has come from them. So I think that, and also in the coming future or even right now, I think login details and IPs of companies, of creators, will be passed down to generation after them. And when there's no legal process on how these logins can be passed down, or nobody has an idea, one of the things I still do, which I'm looking to, thank God for FSL, you guys are going to be helping me, is there was a time where, or I still do it sometimes, I have some very important ledgers that important platforms that I have login details, and I know some digital whatever is there. I write down the login details traditionally on the jotter, and those, you can never find those journals unless I let you know where it is. And it can be very risky. What if there's a fire and it goes and it gets burnt, or what if there's an accident? But God forbid, we hope that doesn't happen. So having a proper what's it called ways to safeguard these things are very important. And a lot of in this part of Africa, or in this part of the world IP, when you say intellectual property, a lot of people do not even know that some of the things they are creating today are intellectual property that are just often sitting in gray areas, and they don't even know that these things are things that in the coming future can be passed down to people. And when it's not properly documented, is not properly gate kept for proper transition process, when the person is no more there, what happens to it? So I think these are certain things that whether founders, whether a creator, whether you sell digital products or you have digital content online, or you're just building wealth, either you use an investment platform where you invest digitally. Like I said, some people invest on multiple investment platforms that are out there, and they are actually building real wealth on those digital investments. So if those things are not properly documented and also get kept, I mean, there'll be a very big exposure when there is no proper system put in place.
Thank you, Chike. You're actually right. You're right. That was a good one. Let's bring in Dorcas. So Dorcas, the creator economy has made it possible for individuals and people building multi-million naira business from their smartphone. Yet, so many creators have no clear plan for what happens to those businesses if they are no longer able to manage them. Why do you think conversations around estate planning, business continuity, and legacy are still largely absent within the creator community?
I thought I had been forgotten. I was almost asking myself, did I misread? Sorry, can you repeat your question again?
Okay, I said that the creator economy has made it possible for individuals to build multi-million naira businesses from their smartphone. Yet, so many creators have no clear plan for what happens to those businesses. So why do you think this conversation around estate planning and legacy are still largely absent within the creator economy?
I think it's, for me, I would say it's because these guys do not necessarily see themselves as people who are creating wealth or who are creating entities that are worth a great deal to the point that it can be handed over as a legacy. Take, for instance, a typical creator that you have to just tell you I'm a content creator. But then a content creator who is already generating revenue at such a scale does not know that when you break down the different value chain that contributes to how such person is delivering value, that you can break down how individual of this element can contribute to something that is of great worth. Your intellectual property is an asset. Your personal brand is an asset. Your corporate brand is an asset. The content that you have is an asset. Your app that is maybe your digital product is an asset. They do not know these things because of the lack of knowledge that is available. So for me, first, I think the point will be that knowledge around this needs to really be it needs to be something that we are constantly being engaged on. And they also need to understand how to appropriate what they're learning and the things that they have into the different quarters that is required. Take, for instance, if I have a digital product, maybe I just create a training, right? And it's a product that somebody can buy maybe on Seller, or it's something that I create a website for myself and I host it there. The question is, who has access to my IP? Who has access to the password? The question is, in the unlikely situation that you decide to step out, because sometimes when you look at the creator's economy, the face of the business is usually just the founder or the person who is known or identified with the business. But what then happens in a situation where you decide to step out? There are certain questions that I realize that creators are not paying attention to. Who has access to what, right? Should I decide to step back right now and I decide to hire someone else who will become the face of the business while I still support the business? To what extent is the decision making going to be? On which stable are the core decisions going to be? Do you have all of these things documented? And I think it still goes back to what everybody has been saying. It's one thing for us to have the infrastructure or the assets that we are saying can be transferred from one generation to the other, that can even become a form of a placeholder for liquid. But another thing is, I think there is need for capability, because that is one of the things that I think would ensure continuity at the end of the day, because all of these things speaks to the gaps that exist, especially when it comes to knowledge, when it comes to exposure, and how best we know how to blend all of these things together. I don't know if I answered your question. Hello.
Can you hear me now? Okay, thank you
Yeah.
so much, Dorcas. Thank you. So, Ronald, let me put you on the spot now. Beyond the
Did I
physical,
answer your question?
yes, I said you did. Thank you so much. You did. So, Ronald, let's just put you on the spot now. Beyond the physical stuff people obviously value, what do you think entrepreneurs are sitting on right now without even realizing it? You're talking data, online reputation, software, intellectual properties. How valuable are these things really in today's economy?
Hello, everyone. Good morning. Thank you so much for this question. I think one of the most important things is, like the previous speaker has mentioned, is knowledge, right? Because we don't realize how valuable these little things, I think these things we call minute, are to the global workforce. I'm telling you, I think the other day I used to think English was not a skill, right? Up until I saw someone pulling off thousands of people, teaching thousands of people literally on TikTok English. And it was a very small something, but it really changed the way I view these things, right? Because we are, as young people, we are sitting on so much, right? And I would always tell my students that, look, it is not the big things that you get to teach. There is somebody somewhere that needs to move from point A to point B, and you're probably at point F, right? And there's also someone that's at point Z, right? Now, your job, your goal is to carry that person, that single human, right, that wants to move from point A to point B, right? Or maybe take him to point C, and he's good, right? But you yourself, most times as people, we tend to, we don't, I don't know too much. I don't, you look at the content, like someone just mentioned the IP, your digital products, your, these things, and people, we think it's nothing. It's just something, I mean, do you know how many people, how many people are going to buy that thing off you? Do you know how many people have need for that simple thing that you've created, right? And this goes along that in Africa, we are still stuck with Tinubu. Tinubu is just here dealing with us, right? And there is so much room for us to. In this current economy, everybody is just trying to survive. And the thing about survival is that you're always trying to get past the next meal, right? You're just trying to survive today and see what happens tomorrow. But there is a reality where we as Africans, young people across Africa, can actually thrive, right? We are fully aware of what we have, the things we know, the knowledge we have, the experiences we've built, right? And we start seeing it as valuable, and we start seeing it as something that the market actually demands. I think at the start of the call, I was just thinking about, I think the first speaker mentioned something. I'm like, oh, wow, this question is very interesting, because there are people right now that are massively, into massive importation businesses from just their bedrooms. They've never been to China. They just stay in their rooms and they order containers, and it comes, they drop ship, do a couple of things, and they're good, right? But we don't realize it yet, because most people don't think that possibility is real. So one of the things I would say is that we, as young Africans, we need to step out from the struggling, right? We need to find a way. It's not easy, because Tinubu is our president, and I don't know what to say about that. So once we're able to step out from that position and we step into places where we know that there is more, we can actually do more. The things we know are valuable. The world needs what we have. I think you would all see great success. Thank you so much.
Thank you, Ronald. Thank you. Actually, we don't see these things. Many people have it, but it's like the same thing Tracy said. We have it, but we don't even realize how valuable these things are. So let's move into estate planning for the digital generation. Why we are here. So at this particular session is directed to Tracy. So Tracy, please get ready. I will direct these questions to you because this is really your domain. So how is estate planning for a technology founder, content creator, and digital entrepreneur fundamentally different from estate planning for someone whose wealth consists of traditional assets?
Okay, so there are differences in how estate planning works for previously and how it's going to work now with the advent of digital assets. Now, the first one is the nature of the assets. Previously, estate planning revolved around tangible assets, your real estate, your cars, the money in your account. So these assets were easily identifiable, easily verified, and easily valued. For your real estate, you can take possession, you can get a hold of it, so far you have the legal documents backing your claim. But now for digital assets, they are intangible assets. You cannot physically see them, physically hold them. You can see them, but you can't physically hold them. You cannot place a specific value on it. For example, if you have a property somewhere, you can say, okay, this property will probably go property will probably go for about 50 to 100 million thereabouts. But with digital assets, the value fluctuates. Today it can be high, tomorrow maybe it can drop. Let me use crypto as an example. At a point, Bitcoin was at an all-time high, and then after a while it drops, and then after some time it goes up again. So when making an estate plan, we'll have to now consider the nature of that asset. And the way we're going to plan for the real asset that we can see is going to be different from how we can plan for the digital assets that are not, they don't have a central repository, they don't have a central place. And seeing as digital assets cuts across different types, the estate plan for them will also have to integrate those types. For example, the plan you have for your shares is going to be different from the plan you have for your YouTube channel. It's going to be different from the plan you have for your cryptocurrency. So when you're making an estate plan, we're going to have to consider the nature of that asset to make sure that we create a very good and very accessible plan for the asset owner. So that's one, that's the nature of the asset. Secondly, a big difference is accessibility. I just said that for real estate property, you can easily go onto the property, or if it's a car, you can easily possess it, seeing as it is something that's already in place, something that you can hold or you can touch. But for digital assets, it's not easily accessible. If you don't have your login key, if you don't have your IP, you can't gain access to it. And you can give it to a beneficiary. You can tell the beneficiary, okay, I have this number of crypto in my wallet, which I'm going to give to you eventually. But if the person does not know where to get the login details from or how to access this, those things will become easily lost. So we have to consider that while making the estate plan. And then value, intangible assets these days for digital entrepreneurs hold the highest value. For a software founder, for a co-founder or a founder of a software company, your most valuable asset might not necessarily be the office where you work out from. Your most valuable asset might be that code that you generated, which you own, and which is the backbone of all your services. So when we're making a plan, we have to consider that, okay, we'll have to impute this. How best are we going to impute this? How best are we going to quantify it? How best are we going to provide for it? How best are we going to limit the access so that only that person who you specify should have it will have access to that? So another difference is cross-border complexity. You can have digital assets all over the country, all over the world. A founder can have a company in Delaware. You can outsource your staffing to Kenya. You can have properties in other countries. And then compared to someone that has just properties in Nigeria or in Lagos, we're going to have to make sure that your estate plans covers for all those different things in the different countries on the different platforms. One person can have a company, you can have a YouTube channel, you can have crypto somewhere else. So your estate plan will have to cover for all those things, cover for the laws that regulate all those things, and then cover for the jurisdictions where all those things are found. So that makes it a bit different from the normal estate plan that we're used to doing before. Then if your assets are solely hosted on digital platforms, now each digital platform, they have their terms of use. They have their contract, which you sign when you sign onto the platform. That's user policy that you sign. So each platform have different rules on how they handle estate planning or how they handle transfer of those assets. So when making the estate plan, we have to also put that into consideration. And that makes it different from the normal estate plan because we have established rules for those. We know how those ones work, but we also know how digital assets work. But now it's now more complex, and we now have to bring it into the picture, bring it to the consultation, merge it as one, and make it seamless. Then, like I said, the second to the last one is valuation challenge, which I'd also said earlier. Valuing these digital assets can be complex because there's no laid down valuation standard. So the values of those assets can move up, can move up and down with time. They're extremely volatile. So we'll have to account for that when making our estate plan. And then the last difference is privacy and security. Now, we all know that a will, after it goes through probate, becomes a public document. And your digital assets, like your keys, your login IPs, should not really be on the face of the will. So not everybody will have access to it. You can make reference to it in your will, but the main login details don't necessarily have to be on the face of the will. So these are the differences that we now have to put in place when creating an estate plan for a digital entrepreneur. It's not the same thing with the traditional estate planning, but what we're basically doing is we're building from the traditional estate plan and then adding new nuances to it as we have new digital assets every day.
Oh, thank you, Tracy. You just mentioned one of the questions that I was about to ask you, but I want you to go into it just a little bit. So you mentioned will, and most of the times when we talk about estate planning for traditional assets, we talk about wills and all of that. But when it comes to this, the wealth that we are building today, many people feel like wills supposed to not even come in. So at what point, where does wills, trust, and private trust fit into this young entrepreneurs' wealth preservation strategy? Where does it come in? And under what circumstance would you be able to, which one should be appropriate for the other when it comes to the way that we are building wealth now?
Okay. So a will or a trust or a private trust structure, they actually come in while you are building the wealth. If possible, I won't say it from day one, but maybe let's say day 10 or so, but it should start from the very beginning. Now, a will is a testamentary document that outline your wishes and how you want your assets to be distributed. So like I said before, from the moment you start having assets, you start owning assets, you should essentially have a will to document what will happen to those things in the event that you're not available to manage them yourself. And a will is not a one-time thing. We always tell people you should review your estate plan as you go along. So with every major life changes, you get married, you get a kid, you get another one, or you get a new asset, you should keep on updating your estate plan. So if you're asking me where should it fit in, I would say it should fit in from the very beginning. As you keep growing, it grows with you, you revise it as you go on, just to ensure that nothing is left out and everything is maintained properly. Same goes with a trust and a private trust structure. Now, if you say what circumstances will they fit in? It really depends on the nature of your assets, the way your family structure is, and your long-term plan for your wealth. Now, a will is the foundation of an estate plan. It's the very first place we go to. It helps to provide certainty. It helps to provide clarity. It allows you to pick who you want to maintain your estate in the event that you're not able to do so. So it gives very clear wishes. But the only thing is, the will starts after your death. It gains effect after your death. So it's something that comes after your death. So that's the downside of it. It's not something that will come into effect when you are still alive. A trust, on the other hand, operates during your lifetime. You can set up a trust while you're alive, ensure that you appoint trustees that will be able to manage it effectively, while you can also still manage it alongside the trustees, but you just make it a cleaner structure that puts everything in one place. And then in the event of any incapacity or death, you don't need to worry too much about what's going to happen, because the trust will keep on going. You have trustees that will keep on managing it without going through the hassle of probate and other things. So one of the major strengths of a trust is continuity. It ensures continuity. Nothing stops, nothing pauses. As soon as it is, as soon as anything happens, you have people in place that have put in structure, that have put in systems, and it just keeps going. So if you have a property in a trust in which you were maybe carrying out renovations or something, and then something happens where you can't give instructions anymore, you already have trustees that can carry on with the work and ensure that whatever you're doing does not pause. Same goes with your company or your shareholding or whatever. And a trust, you can put basically anything in a trust. Your real estate, your digital estate, so far it comprises of assets, it can go into your trust. Now, a private trust.
Thank you, Tracy. Just give us a minute. So let's go to Dorcas first. Dorcas, many founders today are the brand. They are the business in the eyes of their customers and investors. Is there a danger in making the founders and businesses is there a danger in making the founders and the businesses almost inseparable? At what point should the founder begin building systems to allow the business operate independently independently of them? At what point should that come in?
I don't think that it is a danger, because I believe that it has its own benefits, right? And just like everybody has said, the most important thing is knowing at what point is knowing exactly what you separate. It's also knowing where the decision layer lies. It's knowing who has access to what. And I think that subject to whatever form or shape that your business takes, whether you are a content creator who has digital products, or you have a software, or you have a YouTube channel, or you have wallets on different platforms, the goal is to ask yourself, what succession structure do you really want to create for yourself? And just like the last speaker said, this is not necessarily about whether you die or not. Take, for instance, most startups, like every founder, most of them look forward to exiting. That is somebody buying them over and then possibly launching another business. when a person wants to buy your business from you, there are some key things that it's important that you pay attention to. And those things are cut across different areas from if you look at your data for your team, and also the kind of team that you have set up is one of the things that they also want to pay attention to. Also your MOUs and your partnerships, they want to look at, should they decide to buy from you, do you have a laid out plan and agreement with whoever you're partnering with that covers succession in terms of transfer? Will there be a problem? Also, they want to look at the data that you have. Maybe it's your financial data, or it's your customer data, or it's data that has to do with your processes. Is it consistent with what you are saying when they decide to do due diligence? So when you are asking if there's a danger, the only danger that happens is, should there be a situation where the founder, funny thing is, it's not even about debt. It's more about a change in leadership. It's more about a change in decision making. It's more about a change should you decide to even move away from one sector into another, or you decide to move away from one niche into another. When such kind of switch comes in, what structure do you have in place? Who has access to what? What provisions have you put in place? What documentation have you put in place when it comes to governance? Who are your shareholders? What access to certain document about your business do shareholders have access to? You know, and all of those things are the things that I believe that a person will really need to pay attention to, even when it comes to your IP, right? Do you have your copyright? Do you understand? If when it comes to royalties, right? And somebody chooses to say, okay, your person, because one thing is, even as solid as you being a personal brand, separate from your corporate brand, that's also an asset. Should you be engaged from a business and they want you to either be an ambassador and you are discussing royalty, what does that look like? Who has access to the perimeter of what is available to your brand? Should you decide to leave that organization, or should you decide to sell the organization? Does royalty keep going to the business, or it comes to you? So these are some of the things that we really need to pay attention to as content creators. And like I said initially, we don't see ourselves as a business entity with solid assets. And just like the last speaker said, it's because when you look at the digital space right now, and even many of us that are leveraging on technology, assets right now just seems abstract. But these things are actually tangibilities that can be captured when you work with the right persons, with the right legal team or institution that can just give you the right advisory, so you know where to appropriate everything that is required for you, either as a founder or as somebody who is a content creator with multiple digital assets that's sitting within your reach. Yeah, so that's my feedback to that.
Thank you so much, Dorcas. That was actually good. I really like the way you explained that part, and how you did not really, how you said it's not a danger, and then you went ahead to explain why. Thank you so much. So let's have Ronald. Ronald, digital assets often exist across, like there's wallets, there's SaaS, there's products. What practical steps should digital asset holders take today to ensure that these assets can be readily identified, assessed, and valued?
Okay, thank you so much for this question. I think at the core of it, we need to start learning, right? This is why education is very important, right? As a digital creator, as a founder, as an entrepreneur, I think you cut it across boards. We need to sit down. Like I myself, I've been paying very serious attention to financial investing classes because I think the last time I spoke with someone, it dawned on me that you don't even have to have 10,000 naira to start investing right now. And a lot of people still think that you need to have maybe 100 million before you can start getting, investing in the stock market and, things like that. And I think at the core of it, we need to start learning, sit down, learn, because there is no one advice that cuts across board for founders, creators. I think we are all in different spaces. And at the core of it, making money is primary to what everybody's trying to do on the internet. So sit down, start learning, leverage off the information you get for free on the internet. And if I think these things are very free on Twitter, and then like a lot of people that talk about these things that are open to guiding you, right? So when you start learning, you start acknowledging that, okay, I might have something here. I think, let me just put it out there. One of the the largest programs I created that led to me building a startup was, I just put out something very casually, and in less than 2 months, we made so much sales in millions. Like, it was so much. And I was like, I sat down. I'm like, at the end, it took me a while, but I'm like, at the end of the day, okay, this can actually become something. And it led to me building the second startup venture I'm currently on right now. And we focus very heavily on selling, right? If I did not have that idea, if I didn't have the knowledge that, okay, I can actually transform this thing that I just did very casually into a business, build a business model around it, I would probably never know, right? So I think at the core, everyone needs to pay attention to the right information on the internet, because that is what can genuinely change your life, right? Webinars like this, and I think more webinars like this need to happen, and we need to educate people across. I'm so sorry I talk about education too much, because I'm an edtech person. But I love to speak about education, right? And I think things like this should happen right across universities, across institutions, where they teach people what is currently going on. Because like someone else had mentioned at the start, if you carry what was, the way you knew people used to make wealth in 2010 and you bring to 2026, even 2014 and you bring to 2026, it would not work, right? And we are not unique. We are all just passing through this earth as visitors, right? And if times would come and seasons would come where we all need to change, where we all need to evolve, you see industries evolving it right in front of us. So it means that you should too. And you should also know that the way people are making money, the way people are investing, the way people are building wealth right now has changed. The speakers previously had mentioned that some of us used to think about investment as or things like will as when people, we think about it from the perspective of debts, right? But it's taking a different approach to show you that you need to protect yourself, right? And not just protect yourself, protect your family, protect anyone that's around you. So I think genuinely we need to sit down, start sourcing this information. Everyone needs to pay attention, right? Because in the digital space, I operate very, very much in digital space, the creation, the content space, and all of that. And the past few months has really taught me that, and it's really taught me that we all know something, we all have something to offer, right? There is building wealth is not magic. It's all about being able to solve a particular problem for one person, and then being able to scale the numbers, because it also taught me how to very much relate to numbers, because I used to say before, I didn't like numbers. I don't like, everyone says that thing, I don't like numbers, but it's really made me build a personal relationship with numbers, and I understand my numbers. I try to do well with my numbers. I'm not the best, but I'm trying. So what I'm trying to say is that we need to sit down to understand, right? I have sat down to understand a few, and I am still learning. And I think that's what primarily everyone needs to do right now. Sit down, learn, because it's a continuous learning process. It doesn't end, right? And making money doesn't end. So I think we all need to make money till the day we leave this earth. So yes, thank you so much for that.
Thank you, Ronald. Thank you so much. Just like you've said, we need to attend webinars like this. We need to learn. We need to know these things, because that's how we get to know it, and then we start to structure our wealth and all of that. So let's have Tracy. Tracy, we have founders, entrepreneurs, content creators. We have all of them here. What practical steps can they begin taking today to prepare for the next generation, to protect their wealth and all of that?
Okay, so practical steps you can take to protect your wealth. First of all, you should have what we call a comprehensive asset register. You have to make a list of all the assets you have, all the assets you own. Now, this list is not just the names. You have to also put the location, the value, who do you think will be able to better manage it in the case of your absence. So you start from there, and then you think about making a will. You speak to a trusted advisor, fiduciary advisor, on how best you can structure that plan. on how best you can structure your will. Then if you are a company, if you're a company owner, if you're a co-founder, you need to, or even a general business owner, you need to ensure that you separate your personal assets from your business assets. Your personal ownership, you have to separate it from your business ownership. Make sure that they are separate. Make sure that whatever contracts, your major contract your company is signing, you're signing it as a company and not in your personal stead. Whatever assets that you feel you don't want to own personally, make sure that you get it in your company's name. Just make sure that there's that clean line so that in the instance of anything, you won't need to start fighting with co-founders or other family members and all that. Then if you are a content creator or like a YouTube or Instagram, TikTok, whatever, or you create products, you sell products online, books, courses, and all that, make sure that you protect your IP. And how do you protect your IP? You make sure that you register it on time. If you don't register your IP, I'm sorry, but you don't own that IP. So you have to ensure that it is registered with the trademark registry. First of all, if you don't have a company, you incorporate a company and then you get your trademark registered. And one thing I've noticed is that some people confuse the two. They think that just registering a company also automatically makes you own your IP. No, that is wrong. Your IP should be registered on its own. It's not the same thing as company registration. Then if you are a founder, ensure that you have your proper documentation in place. You have your shareholders agreement, you have your founders agreement, and then to ensure continuity, make sure that you separate ownership from management. You can be the owner, but you should have a capable management in place that can manage things for you. Things such as signing of documents, making decisions and all those things. Set up processes, set up things that if you are not there, business will be able to go on smoothly without having any hitch or any disturbances. Then include your digital assets in your estate plan. Ensure that whatever you are making, whatever you are bringing up, your digital assets is well provided for. Many people tend to overlook it. They just focus on their normal assets, their real assets, their jewelry, their cars, and all that. And then they forget that these digital assets also have value and should also be protected. So whatever list you are making of all your assets, ensure that your digital asset is included. And also, you need to also consider the tax implications of transferring these things. Currently, our new tax act covers digital assets. We have, for people that are trading in virtual assets, the virtual asset service providers, our new tax act covers for how you trade, how you share amongst yourself. So you have to, when making your plan, you have to also consider what are the tax implications. Who's going to pay the tax when I'm transferring this? Is it going to be me, or is it going to be the person that I'm transferring it to? So you need to make plans to ensure that those kind of things are mitigated. And then lastly, if you run a company, you need to make sure your governance protocols are in place. You need to have a very good board. You don't need to, when starting up, you need to consider the kind of people that make up your board. Ensure that they are qualified, they are competent, and they're actually fit to run that business for you in case of emergencies. So those are the things that I feel as founders you should consider when making your plan.
Thank you so much, Tracy. Just like Tracy has said, she have listed the steps that you need to take for you to move these assets to your next generation and also protect them. So let's open the floor to our audience. Let's just have some questions. If you have a question, you can drop it in the chat or you raise your hand. Okay, we have one person's hand raised. Omotala Dorcas. Okay, you want to say something?
Yeah, I wanted to add to what Tracy said. We really pay so much of attention to creating wealth and also planning for either who we are transferring it to or not. But I think we also need to talk about preparing capabilities, especially if you are a parent or if you are the firstborn in your family, and you know that your next of kin is the one that you have lined up in that line of succession. It's important that we also talk about building capabilities in these people, because there is need for continuity, but not just continuity so that my property is handed over to someone, but that the person is capable. The person has the required knowledge, understands the framework, understands the environment. Yes, because sustaining it is important. Thank you, Chike. Sustaining of wealth is as important as continuity in management. And that's one of the things I wanted to add to what she said.
Okay, thank you so much. Thank you so much. While we wait for the questions, let's have the speakers just give one practical action that every participant should take today from this webinar, whether it's a founder, entrepreneur, investor, whatever it is, what it will be, why, just like if one final reflection. Let's have Edward.
Thank you. Madam Dorcas, thank you very much for that point you made. It's something that I just had ringing in my mind as a final contribution. You see, in terms of practical steps that one can take from here, a lot has been discussed, and depending on how far in or how far into the journey of capacity building that one is, all of this might seem easy to implement or difficult, like, oh, where do I even start from? So I want to just go back to the whole AI making or reducing barriers to entry and the likes. There's a I think from some of the things that Mr. Ronald also said, you see, everybody keeps talking about how we see, the endeavor of, protecting wealth, and like Ms. Doka said, sustaining it needs to change. Okay. If you look at some people, evaluating the creative economy, there are those of us that feel like, okay, this is just vibes, it's not serious. But you see, the line between vibes and serious business have been blurred and will keep getting blurred with, the advancements in technology. So there are people that feel, oh, what I'm doing is probably not even at that stage. It's not serious business yet. But really, you need to actually go back and rethink and look at, evaluate your philosophy. How do you actually see what it is that you're currently doing? And I think a practical step for me would be this. You can't solve a problem you don't understand. The endeavor of protecting wealth. There's the conversation of building wealth, but the endeavor of protecting wealth is not a one-time event, right? It's an ongoing thing. And what that means is you cannot say, oh, I got it now, and then, later you're just going to, not pay attention to it. So what that means is one cannot afford to be ignorant. It needs to be, something that is a pursuit. You need to elevate one's thinking. For millennials growing up, I think when I was a teenager is when I caught on with this whole rich dad poor dad thing, and that really helped with a level of financial education. And now coming into a different phase of my life and realizing, okay, it's one thing to actually work on income. You now have to think about protecting it and how do you preserve this thing. So the matter of capacity building, like Ms. Doka said, is very, very important. And one of the practical ways that you can live here and start doing something about it is go to your favorite AI model and ask questions based on where I am right now. What is this entire thing all about? Because if you don't even know how it works and all you know is, oh, they said there's T-bills, they talk about S&P 500, they talk about investing in real estate, you don't even know how to deploy these strategies. But if you understand what it's really about, then you can say to yourself, okay, now I know how this thing works and I can choose and pick and say, this is what I want to do and this is how I want to do it. So I think it's very, very important you live here, start from, those baby steps to really understand, what are the options available to you? What is all this, issue of will and trust, how it actually works. And that begins to equip you with the knowledge to think up strategies, think up ideas, and begin to follow through on implementation. Else, it just becomes very far-fetched. Thank you.
Thank you so much. Thank you so much, Mr. Edward. Let's have Mr. Chike. What do you think about this? The wealth itself, the building and the structuring, the protection. Okay, seems like Chike is not there. So I think the audience don't have any question.
Again, I didn't get you correctly.
Okay.
Yeah, can you hear me?
Yes, I can hear you now.
Yeah, I said, please take that again. I didn't get you correctly.
Okay, we are just at the end. So we just want to have you give a reflection from what we've discussed, building the assets that are valuable, and just general run through.
All right, I would say one of the things that I like to add, especially from the standpoint of from building wealth to even being able to understand what wealth creation really looks like. I will also say, in my job, I sit at the intersection of institutional business and being able to see people who are high net worth individuals. In one of my meetings last week, I was in a meeting with an asset manager who they currently manage over 200 billion naira in assets under management. And they talk about many of the HNI. We had a conversation about many of the people who have those assets in their custody. And it just began to give me an idea of what, what's it called, wealth management, building wealth really is about. Then coming now to the conversation we have today, one thing about sustaining wealth as you, the person who is the builder of the wealth, because some people build it and are not able to sustain it. And certain legacies and structures like this will help you as a person to learn. Then transitioning the wealth and being able to make sure that when the wealth is transitioned after you, it can be sustained. I was reading about, I think I'm trying to remember the family, whether it's in Canada, one of the richest family offices or one of the richest families in Canada, there was a succession plan. And I think it came to a time where one of the grandsons was supposed to take over. But there were some criteria that were put in place for takeover. And he hadn't met, I think, one or two criteria. And it had to be that his mom, because his dad died and it was supposed to be him, but his mom was still alive. And because he didn't meet that criteria, they had to bring in the mom. She stepped in. So because the woman and her husband have been managing, but there was a clause where if the man dies, the son now continues. But he didn't meet a certain criteria, which he was supposed to have done. And at the end of the day, it made me understand that even while you create the succession plan for future purpose for people who can come take over, make sure they have the capacity to be able to fill these positions. Because one thing I've realized is, and I don't like to, it has become a cliche word when people say, oh, the rich knows how to teach their children. That's a very big fallacy. I've met many rich children who don't know babadash on how they will take care of the wealth if their parents pass it down to them. Yes, by my interaction, and I've met with many of them. I've been exposed to many of them. If you give that wealth to them, it will be squandered at the end of the day. So being able to intentionally open the people or whoever is going to have access. I'm not telling you to not let them live their life, but it means them living a life that they can understand that there's a position that you are picturing for them, while they are able to also build their life around the things they will want to do in the future. But they should also know that there's something that is already somewhere that they have to also build capacity to be able to come into, because that in itself, I tell people, I say, see, if you have a family that has built the background for you to fly on, you are one of the luckiest persons in this world, because when you have a background that you can leverage, I see it as a means to an end. I mean, some people have read Otedola's book, and different ideologies have come out from that book. There are people who have bashed him. There are people who say, oh, I read the first page and I dropped it. But for some of us, we read it and I picked what I needed to pick. But one thing that is good that I see there is that if you have access and you are able to leverage access, but if you don't have the capacity to leverage access, you will squander the access and you waste it. I've seen it over and over and over play out, even in my current, some of the people who I've met in recent times. And I tell them, I said, you can't have this kind of access and waste it. Oh, it's not the life I want to live. That's no, I understand that you as a person, you have your own life you want to live. But if there is a background that has been, if there's some that has been built that you can tap into, why don't you just go back and say, okay, what can I give part of my time? I mean, I'm an economist, there's something called opportunity cost. So what is that part of my time I have to give to this, so that I can see it as a means to an end for what I myself want to achieve? I have a friend whose father runs one of the major asset management companies in Nigeria, and he wanted to build something else in the UK. And he told me categorically, he said, Chike, I have to come back to come understand how finance works. And my father has built an asset management company where I have to come back and be an employee. And now I'm happy I made that decision coming back. And he put a very last clause there, and he said, at the end of the day, one day this will pass down to me. That's a guy who already understood that this is a means to an end. So he's following through, understanding, learning the ropes, and getting ready for what is going to come to him, while he's also making a plan for himself in the future. So I think in building all of these things, we should also know that being able to sustain it and making sure the people who even come after can actually have the capacity to handle these things is very important. So thank you so much, Dorcas, for this. And thank you, everybody who has actually contributed.
Thank you so much. Thank you so much. Let's have Roland just share his thoughts before we close with Dorcas. Roland, please share your thoughts on everything we've talked about today.
You're muted, Faith.
Okay, sorry. So we've heard everything that all the speakers have said. We've had like a wonderful conversation. Dorcas, let's hear your thoughts on it before we go to Ronald.
Okay, I think the first and the second speaker have already layered on what I wanted to say. So whatever I want to say right now will just be very short. So for me, there are three things I would really summarize all of this conversation into. First is I would advise that every one of us on this call, even myself inclusive, we need to take an inventory of the value that we are creating, and also identify what are the things that we actually own, whether it's physical assets, whether it is digital assets, whether it's financial, whether it's intellectual, whether it is relational. And when I'm talking relational, I'm talking about, do you have data to your customer base? Do you have data that also provides intelligence into your partnerships, your vendors, your shareholders? You really need to understand what you own and what you have control over. And another thing you also need to do is to formalize your structure. And it speaks to, okay, so for a business, you want to formalize your structure internally, right? With your team and with your operations of how your business run. You also want to talk about, consider the external structure with shareholders, with stakeholders, with partners, with vendors. And you also want to look at another extension, which is family, right? And that already covers what Chike talked about, because there's a need for you to be able to clarify ownership. There's a need for you to be able to identify who are the beneficiaries of what and to what extent can they wield their power to take control of whatever it is that you have. There's a need for you to also put into consideration legal instructions that would be the guiding principles that determines what goes to who or what stays within what. There's a need for you to also put governance in place, who has access to what as well, and also create a succession plan. And I love the example that Chike gave, like I was just smiling in my head. It's important to have such kind of clarity when it comes to the structure that you want to put in place. And most importantly, you need to build continuity. You need to establish a framework that allows for sustainability of whatever it is that you are putting in place. You want to reduce unnecessary dependency on yourself. I would say that everything we are saying right now, you need to change that mindset that thinks it is only when I die. No, look at this as a business decision. It's not just about when you die. It's basically about the reduction of dependency on you as a founder. Reduction of dependency, you need to create a bank, a resource pool where you are documenting your knowledge. You are also documenting whatever assets or whatever resources that the business has. Another thing you want to also do is to build capacity in people, your family, your the people within your succession plan, your team, your management. It's important that you do that. Create systems that works, systems that are flexible, that is not very rigid, something that you know that it has a bit of static element in it, but then can also be flexible. Is something that can work, right? So for me, I also want to say that you also clarify decision making at the different places where you know that you have defined, okay, this is who have access to this, but at what point does this thing happen, and who can trigger an action to happen. For me, those are the things that are coming from the top of my head, because the goal is not just to simply leave your assets behind. That's not the goal. But the goal is that you are leaving a very, very clear scope, right? There's clarity around the assets that you own, right? And you also have capable people who can steward them accordingly. And you have systems that would allow these people to be able to function, and that will also allow the value that you have created to continue even after you, when you leave the decision making, or maybe when it so happened that life decides to open the channel for you to transition into another sphere of existence. So for me, that would be my last comment to everyone on the call. And thank you very much for the team for having us. It's been an interesting conversation.
Thank you so much. That was actually beautiful. That was amazing. I really liked how everybody, if you look at this, all the speakers just have an alignment. One conversation leads to another, and everything just brings a beautiful. I really love this. I really love this. Ronald, let's just have your final thoughts. Do we have Ronald here? Okay.
Hi, yes.
Okay.
Hi, babe.
Let's just have your final thoughts on everything.
Okay, thank you so much. I'm so sorry I missed the last session. I was engaging a different conversation, but I think we are in an era where wealth has taken a new dimension, like we all have said, and we've all come to that conclusion. And I think the earlier people realize these things, the better for every single one of us, right? And we know that now we are not waiting for our government to do much for us. We know that the simple knowledge you have, the simple products, the simple softwares, these are all things that accounts to wealth building. Like you want to build a startup, you even want to get creative advice on how to, we should start speaking to people that can help us with these things, that can help us package these products, that can help us with there was a word that was used from the lawyer. I can't remember that particular word, but I think it's genuinely time for us to do more. Right, this creative era cannot pass us by, because after this creative era, something is going to come up probably next year, and as a digital hustler like myself, I say to people, please keep on the hustle. And also, please make sure you seek information, make sure you seek knowledge, because that's going to help you go a long way. Thank you so much, Emily.
Thank you so much. Thank you so much. Just like Tracy said initially when we started, before you start any protection and whatever, you have to know these assets that you have. And then she mentioned that there are different criteria that it takes to actually protect them, the value, the type of assets, and all of that. So if you don't even know that you have the assets, how do you protect them? So I think let Tracy give us the final word before we close.
Okay, so my final comments on this, if I'm advising the participants here on what to do today, first things first, ensure that you have a legally enforceable estate plan in place. Now, like I said before, it differs according to your needs and according to the nature of your assets. For some people, you just simply need to prepare your will. You speak to your lawyer, you speak to your legal advisors to prepare a professionally drafted will for you. For other people, like founders and business owners that have complex assets, you might consider setting up a trust or reviewing your ownership structures. Check it if you still own your business as an individual, it might be in your best interest to move it into a company structure. If you don't have anyone that can second you in your business, that can actively manage it for you, you can start thinking of training someone that can do that. Then secondly, you have to organize and document your assets. So as like we have been saying, wealth is no longer tied to the physical property that you can see. It's tied to your digital assets. So you have to maintain an up-to-date inventory of your assets. As you keep getting new ones, as you keep disposing of some, make sure you keep updating your registers to ensure that it is up to date. This will help to bring clarity and prevent arguments for any reason when you are no longer able to manage those things. Then lastly, you need to build structures that ensure continuity. You need to build structures that ensure continuity. For founders, you have to ensure that your corporate governance practices are up to par, your documentation are complete, they are in place, they are duly signed, they are duly executed, everything is accessible to who needs them. For families, you talk to each other about succession, about planning. You parents, you talk to your children, you show them what you're doing to make money, how you manage it, and how they can come in. It's never too early to start those conversations, and it's also never too late to start those conversations. So if you've not had them, this would be a good time to start having them. So if there's one message that everyone should take away from this conversation, is that wealth creation and wealth preservation, they go hand in hand. Building wealth is just half the journey. Securing it is what sustains it. So, and you don't have to wait until later in life to start your estate planning. You can start now. A stitch in time saves 9. So you can start now. So thank you.
Thank you so much, Tracy. Thank you so much. We've talked about everything. This is a huge conversation. We've talked about everything, your assets, your content, YouTube channel, your SaaS, your crypto, all of these are your assets. There is a lot more. I think Edward spoke about agri-tech. There are so many assets that we have that we don't even know about. So if you want to actually keep this conversation going with us, I want you to scan the code on your screen, and it takes you to a quick poll, and it unlocks like a 45-minute session with our team. If you want to continue the conversation, you can see that there's a lot to talk about, from the building to the protection, to even finding out what these assets are, what you own. So let's just scan the code on the screen. Let's have the code, please. Okay, while the code is being projected, let's have Mrs. Mercy. She's the founder and CEO of Fiduciary Services Limited. Let's welcome her. Let's welcome her.
Okay, yeah, thank you so much, Faith. Thank you so much. It's been absolutely fantastic in having this session today. And honestly, I have learned, even if I'm part of the community, I'm part of the business, I on my own have learned so much. And I hope that everyone here as well has been able to learn. I always take each day as a learning platform. The people you meet, the conversations you have, and every other thing you come across is just targeted at your growth. That is my mindset. So for me, today has just been absolutely fantastic and amazing. Our speakers have been out of this world. I do not have any other thing to say but to say our deepest, sincere thank you to all the speakers, to Chike, to Edward, to Dorcas, to Ronald. I am just absolutely thrilled that you were able to make out time from your busy schedule. Each of these individuals have very busy schedule, and you took out time from your busy schedules and you joined us today. Thank you so much to Dorcas. Thank you so much to Ronald. I know when we started this conversation, it looked like Faith was so keyed into what Chike and Edward were talking about, and she just omitted the fact that she was supposed to start with the ladies first. Ladies first, ladies first. So Dorcas, thank you so much, because at the end of the day, you said everything that I would have said, and it's just amazing that we are like almost speaking the same. We have the same mindset when it comes to assets, multi-generational wealth, and planning the assets that we have. So thank you so much, Dorcas. Thank you so much, Ronald. Ronald, it's been amazing getting to meet you, to know you, and to kind of understand your business. The same thing too with Edward. Edward is actually my lecturer. I'm doing a program on the blockchain and cryptocurrency, and Edward has taken me like 3 or 4 courses on that program. So just getting to also meet him on this level where we are talking about legacy planning, estate planning, and what we should do is also very amazing. Chike has been there for us from day one. It was like, okay, you know what? How do we go? I mean, when do we start? So Chike, thank you so much. And we wish you all the best in your endeavors. And as you join blockchain in like the next couple of days, .com, your next journey, your foray into this space. We wish you all the very best. And to all our participants, this conversation continues. It does continue. So take advantage of all the resources that we have. The first and easiest point that you could do is to subscribe to our newsletters. Our newsletters will keep you posted. Follow our social media handles, and also book a free 30 minutes call with anyone in our team, just to get clarifications, just to say, where do I start? Just to give you those, and you will believe me, you will see that they are low-hanging fruit. So like everyone has said, wealth is absolutely democratized now. It's not the way we used to have it when we were growing up. It's very democratized. There are no gatekeepers anymore. So those people that kept us from being wealthy, or those stereotypes, or those ideas, or those things that we felt, oh, if we are not this, if we are not a lawyer, if we are not a doctor, if we are not, we cannot. No, those things don't matter anymore. You have to be able to harness value, sell that value to people, try to multiply that value, and at the same time, make sure that your legacy outlives you. So we are building businesses that future generations will look back and they will be grateful that we did so. So thank you so much, everyone. We are immensely grateful. Please keep a date with us again in another 6 months' time. We will come with our webinar once again. So thank you so much. We truly, truly do appreciate this time. Once again, thank you to our speakers. And please, let's keep the conversation alive. And we look forward to hosting you and having everyone again in the next couple of months. We wish everyone all the very best this second half of the year, and we pray that all our aspirations will be actualized. Thank you so much, everyone. Yeah, bye for now.
Thank you so much, Mrs. Mercy. Thank you so much. You've already said everything. I guess we are just going to close here. Thank you so much once again, and we look forward to hearing from you. We look forward to future events. We look forward to the calls, and if you are booking a call with us, we are going to help you. Just come to us, and then we'll continue this conversation from where we stopped. So have a wonderful day, and bye.
Bye. Thank you, Faith. Have a blessed day. Bye.
Thank you, everybody.